Good morning. Welcome to Top of the Morning by Mint, your go-to weekday newscast for the top 5 business stories. It's Thursday, December 19th, 2024, and I'm Nelson John. Let's dive in. Adar Poonawalla's recent dive into Bollywood, in which he snagged a 50% stake in Karan Johar's Dharma Productions for a cool 1,000 crore rupees, isn't just a one-off. It hints at a bigger potential shift across Bollywood. Poonawalla, known best for producing vaccines, teaming up with a giant like Dharma Productions, could set off a trend. Industry insiders weren't taken aback by this development, as Dharma had been actively seeking fresh funding amid a string of less than stellar box office returns and cooling interest from streaming platforms. Before Poonawalla stepped in, giants such as Saregama and Reliance Industries were also in the running, highlighting the attractiveness of film studios as potential investment opportunities for diverse business conglomerates. Now, this move could encourage more such strategic investments, writes Lathaja. It could also reshape how Bollywood studios align themselves with broader business interests, potentially leading to a wave of revitalization that could impact content creation, distribution, and marketing strategies across the industry. Despite allegations of anti-competitive practice by Zepto, Instamart, and Blinkit, the Competition Commission of India is unlikely to launch an investigation into quick commerce companies. Sources told Dhirendra Kumar and Girish Chandra Prasad that the information provided to CCI didn't convince them that there was any anti-competitive behavior that warranted further examination. This booming sector, projected to hit $6 billion in sales by 2024, seems too competitive and beneficial to consumers for the CCI to take action on its own. Meanwhile, concerns persist among traditional retailers represented by the All India Consumer Products Distribution Federation. They claim the platform's allegedly predatory pricing and inadequate enforcement of FDI rules could threaten traditional retailers and are urging a closer look to prevent potential monopolistic outcomes. SEBI's tightening of rules in India's F&O markets aim to cool intense retail trading driven by expectations of quick profits and the gamification tactics of brokerages. Measures such as increasing index contract size to 15 to 20 lakh rupees and adding a steep 14% loss margin for contract sales on expiry days kicked in on November 20th. More rules such as upfront collection of option premiums by brokerages are expected to take effect in February 2025. For retail investors, these higher barriers mean trading in F&O will require more money and a deeper understanding of the markets, essentially pushing out those looking for quick, easy profits. Brokerages, particularly discount ones such as Zerodha and Angel One, could take a hit on their bottom lines as reduced volumes will force them to rethink pricing or diversify their services. Abhinav Saha takes a look at this new era in India's F&O market. In India, companies are stepping up their game on diversity hiring for roles ranging from software development to mechanical engineering. They're not just looking to fill positions. They're trying to show they're progressive and uphold strong corporate governance. From big names such as Robert Bosch and IBM Corp to Noida's Coforge Limited, there is a growing trend including people from diverse backgrounds, including those who are differently abled. For example, over at RV College of Engineering in Bangalore, they've already recruited 26 students under diversity categories this year. This push towards diversity isn't just about doing good, it's also about looking good, reports Jaspardia. Companies are increasingly aware that strong diversity practices boost their brand and appeal to investors who value robust environmental, social, and governance ESG standards. This is in stark contrast in the US, where some big companies and universities are pulling back on their diversity initiatives, wary of running afoul of anti-discrimination laws. TVS Credit is in talks to buy Avendus Capital from KKR, aiming to boost its financial services, sources told Ranjani Raghavan. It's considering funding the purchase through internal accruals and may consider debt later. KKR, which invested $120 million in Avendus in 2015, appointed Rothschild after Nomura withdrew from facilitating the sale. Avendus, known for its strong investment banking and startup advisory services, could be valued between $500 to $700 million for a 70% stake. Serious bidders include Mizuho and Carlyle, but a final decision is likely to be pushed to January owing to the holidays. A successful bid could significantly expand TVS's financial sector footprint, adding investment banking and asset management to its portfolio. That's all for today. You can also listen to the Top of the Morning episode uploaded every weekday at 6 a.m. Be sure to check it out. Thank you for joining. I can't wait to bring you the next episode of Top of the Morning, packed with the latest in business news. Until then, have an awesome day.